Hi everyone, let's look at my bullish and bearish micro and low time frame scenarios on Bitcoin, starting with the bearish Elliott Wave scenario on the micro, where we're looking for this to be a WXY, which is finished, which might be the end of a wave 4, for then eventually a wave 5 to the downside. In this particular scenario, during my morning update over here, I mentioned that after this trading setup from the lows, we had a 3-wave structure, so at least the stop loss break even is a must. However, I also spoke about either closing or taking profits, because there is of course a risk that price was going to move to the downside as mentioned, and that is what it did. We moved to the downside on increasing volume. Now in this particular scenario, we reached the target, most common target for a wave Y, which is pulled from the low over here to the high of W to then the low of wave X, which is the 1 and the 1.236 over here. I do think it is quite a pity that we didn't yet hit the 28.1k daily naked point of control, but hey, I do have scenarios where price might go to the upside and actually still hit the daily naked point of control. But in this scenario, we expect this to be the end of at least the first part of wave 4 or already ending wave 4. I'll show you this on the low time frame bearish scenario in a second. And we then expect a move to the downside for wave 5. If we then go to a more bullish scenario over here, or at least it is still corrective, but we still expect a move to the upside, so that's why it's a bullish scenario. In this particular scenario, we're looking for an expanding flat, so that is basically 3 waves in wave A, 3 waves in wave B, and then an impulsive structure in wave C. An expanding flat is the most common structure in a wave 4, which I'll show you again on the low time frame bearish count, where this is then part still of a wave 4, after which we expect a 5 to the downside. So in this scenario, an expanding flat, we then have a 3-wave in A, which then is a 3-wave here, a 3-wave here, and then another 3-wave here. So it's basically a zigzag in this wave A, followed then by a 3-wave structure in wave B, where the most common target for wave B expanding flat is between the 1.236 and the 1.38, which sits between 27k and 26.8k. And we also have the daily naked point of control at 27k as a little bit of extra support in case price does go to the downside. It will also take a triple low on some charts, like on my chart over here. The double low over here is at the exact same price, and then we have another low over here. So we have a triple low basically that we can take liquidity from, as well as hitting the daily naked point of control, entering this target area for then a bounce to the upside, where wave C is an impulsive structure. So that can be a very quick move. Now, with this potential trading setup, first of all, we're in a bearish environment, right? A bearish trend to the downside. So longs in general are more risky. And that is also why for this particular setup, it's a reactive trade. It is not a proactive trade, meaning longs are not limited inside this area, at least no financial advice. I mean, you do you, of course, all good, following your plan, your strategy. That's what it's all about. But from an Elliott Wave point of view, it is not that smart to ladder longs in this area, because price might also just dump to the downside. It might take this liquidity, but use this liquidity for like basically fuel for a move to the downside. So once price goes below these lows, it can go very, very, very quickly. And then of course, if longs are laddered with a stop loss below here, you're basically stopped out in literally 3 seconds, which is of course not what you want, right? So this is a reactive setup, basically meaning that if price is going to find support in this area, and maybe even range a bit, or at least create a wick and starts to move, that is the moment where, hey, yeah, from an Elliott Wave point of view, this might actually now be interesting. So we have to wait and see how price is going to go to the downside before potentially a wave C to the upside. So of course, this trading setup based on Elliott Waves, and it is educational, guys. We're on YouTube, right? I'm no financial advisor. Where then for wave C, we are looking to the upside, where you can see that the minimum target for this wave C at the moment, as it stands now, I basically put the I had the Fibonacci as well as the trend-based fib extension, which is the 2 1.618s. I pulled them also towards the 1.38 in case price goes down to the 1.38. The targets are the ones you see over here, where the daily naked point of control will be hit in this particular scenario. So we first go down, take the daily naked point of control, then go up, hit the upper daily naked point of control, and then continue our way to the downside, where this is then the high of wave 4, looking for a wave 5 to the downside. So yeah, quite an interesting setup indeed. And then if we go to an unlikely scenario, I do want to show you this before moving to the low time frame preferred scenario I have, which is the bearish one. This is unlikely, and I just want to explain to you why, so you understand from an Elliott Wave perspective. So if this is a 5-wave structure now in a wave A, so we then have a 5-wave A, not a 3-wave A. This is now a 5-wave impulsive move in wave A, which first of all I don't really like, because this wave 5 has the highest amount of volume, and usually a wave 3 should have higher volume than a wave 5. That is usually, exceptions are there, but that is at least number one. Number two, why I don't really like this scenario, if this is a wave A, which is a 5-wave structure, you first of all don't want to, the invalidation is the low. You don't want to see price go below the low in a 5-3-5-wave structure. That is then what we're looking for. The second reason I don't like it, besides the volume in wave 5, which is higher than 3, is that this wave B went to the 105. So if this is a wave B in blue, we're looking at this to be an expanding flat 3 waves in A, 3 waves in B, and then a 5-wave move in wave C. But wave B reached the 105 and not the most common targets of the 1.236 and the 1.38, which were just above, around the daily naked point of control. But as you can see, price didn't hit the naked point of control, and it returned at the 105, which is a rare target for an expanding flat. And then we have this move to the downside, which went past the 0.886 Fibonacci, pulled from the low to the high of A. And I mean, the 886 is a valid target for a wave B, but usually what you then want to see is the price hitting the 886, then moving away and not closing 2 15-minute candles below. Even if you go to the 1 hour, you can see the 1 hour candle even close below the 886. So usually when that happens, the risk, or at least I should say the risk, the probabilities of price continuing to the downside is much, much higher than finding a bounce where we are right now, with closes below the 886, so close to the invalidation as well. Not what you want to see. And then, yeah, if this would play out, then wave C does have a common target area, which includes the daily naked point of control. But I just wanted to mention my 3 reasons of why I think this scenario is unlikely. And if we then go to the low time frame scenario, so what we're looking for over here is for this yellow wave 4 to be in, or already is in, or eventually be in, if this is indeed an A, B, C. And then if this is an A, B, C, then this target area for wave 5 is irrelevant, because we're going to find a bounce like this and then move lower for 5. But what we're looking for at this moment in time is a 1, 2, 1, 2, yellow 3 over here finished, now ranging for a wave 4, which is exactly what you want to see. Wave 2 was short and deep. Wave 4 tends to be shallow and longer in time. It's already quite nice and long in time, long enough basically for this to be a wave 4 already, for potentially a 5 down. But of course, again, with the scenarios on the micro, we might see another move up and then down for wave 5. However, if this is the high of the yellow 4 over here, which then was made at the 0.236 Fibonacci, taken from the high of 2 to the low of 3, which is a valid target, and this is the beginning of wave 5 to the downside, or this is wave 5 to the downside, then the most common target area for the yellow wave 5 is in between the white box, which is between basically 27k and all the way down here at 25.9k. These are the different targets for a potential wave 5, and you can see it kind of includes the daily naked point of control as well as a key level. And if I zoom out, the key level is basically the lows over here. So yeah, if these lows are taken, you definitely want to see some sort of a swing failure, like price going below, like wicking below, closing above, and then move to the upside. Because I think if we're going to close candles down here, well, my next target box to the downside is at 24,850 over here. So that would be quite a drop as well. But of course, we have to wait and see what happens with price. And after that wave 5 is in, that basically means the blue wave 3 is in, after which we get a bit of a bigger range, and then a blue wave 4, before then a wave 5 to the downside in blue, which I think it would be nice that this wave 5 might end somewhere around the yellow target box between 24,850 and 24,377. So that is definitely something to look out for. Now, of course, as mentioned, is this wave 4 already in? We don't know yet. Like, yes, could be if this is then the WXY scenario, but if this is an A, expanding flat B, C, then the yellow wave 4 is going to move over here for then wave 5 to the downside. So we have to wait and see a little bit, of course, what happens. And that is also why I, at the moment, don't really have a potential trading setup over here, because, of course, one could say, well, if price is going to enter this area, we have a long over here, stop loss below, moving to the upside. But the risk to reward is not really great because this wave 5 target area is so big as well at the moment. So yeah, where's your entry eventually going to be? What's your risk to reward going to be? Because we expect another wave 4, which is then also quite a shallow retracement. So yeah, maybe the risk to reward is then like a 1 to 2, or at least this white area over here is an important support resistance area. It was resistance here. It might eventually act maybe as resistance again for maybe the blue 4, or who knows, right? But yeah, it's not great. So yeah, at the moment, not looking at it, just focusing on the micro in this particular scenario. So yeah, I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.